yesterday held its overnight rate at 2.75%. That paused a series of 7 consecutive rate cuts, which amounted to a total of 225 basis points of easing. That began in June of last year. What does it mean to the housing market? Let's speak with an expert. He's Victor Tran, mortgage and real estate expert at Ratesdotca. Victor, you said in some recent commentary that the current economic environment has really cast a chill on the housing market, and tariffs are a big part of that story. I was interested to see that sales and listings declined almost immediately after it became known that Donald Trump would impose tariffs on Canada. Tell us more about the macro backdrop here.
Well, I mean, the confidence with buyers is I'm going to say at an all-time low, but it's simply just not there anymore. You know, the fear of missing out and getting to the housing market is just no longer there. Now it's about the fear of overpaying. I like to give some mathematical examples. Let's say a first-time home buyer is purchasing a home for $500,000. Lots of people rely on minimum down payments. So let's say this person puts 5% down, $25,000. They start off with a mortgage of $475,000. Of course, they have to pay the default insurance premiums. That's 4%. That's added to the mortgage balance. So now they're starting off with a loan of $494,000, whereas they purchased for $500,000. Most people will close or take possession of the property roughly around 60 days out. There's a good chance that the property they purchase 60 days later could be less than what they purchased for. So lots of people are really concerned about that, right? The math may not make sense. Most people don't want to hold a mortgage that's going to be underwater, basically being to a negative equity zone.
How many people are you talking to who would like to sell their homes, and maybe they need to sell their homes? Maybe they need to move. Maybe they need to move to another city in Canada, and they are finding it difficult to do so. How common is that scenario?
Well, I mean, personally, I represent a lot of buyers and sellers. Fortunately, the majority of my sellers are in no urgent need to sell the property. I mean, there are families out there in Canada that are in an urgent need to liquidate and to sell. But anecdotally, I don't have many clients that are in an urgent rush to sell. And that's why we're seeing a lot of the property values somewhat sustained, especially within the GTA, right? Especially Toronto. Yes, property values have dropped in the past few years, but not as much as what people hoped.
What's it like in areas of the country where, for instance, the automotive sector is a key employer? Areas like Windsor, Ontario, Brampton, Ontario, Oshawa, Ontario?
Yes, those industries will, of course, be impacted. A lot of those companies are already reacting to the U.S. tariffs, and that plays into buyer confidence as well, too, right? Lots of people don't want to make a big move and take on a debt that's 6 or 7 figures when it comes to purchasing a home. Lots of people will be preparing for the worst, and of course, preparing for a potential job loss as well, too. So if any homeowner is forecasting for any type of job loss or any difficulty financially in affording a mortgage payment, best to reach out to a mortgage broker or their current lender to seek some options to see if there's any ability to maybe put some payments on hold or defer payments for the time being. It might be a good option to even refinance right now into a longer amortization to reduce some payments while they are still employed. Once there is a layoff, unfortunately, there's no possibility to provide income or employment verification, and they won't be able to qualify at that point.
It sounds like a pretty good market if you are wanting to buy a home. Now, granted, most people who want to buy a home have to sell one in order to do so. But talk to us about this market from a buyer's point of view.
Well, I mean, for first-time home buyers, again, it's scary, right? No one wants to catch a falling knife, but life goes on. You know, people have children, they get married, they build families, and they need to upgrade to a bigger home, for example, if someone already owns a current home. So people that have the ability to purchase and they have the means to do so and they can afford it will still purchase. And it may not be a bad idea if they're going to be purchasing to hold for the long term, let's say 10 plus years. You know, especially with the Toronto real estate market, it's fairly predictable in the sense where it has only gone up. Yes, there are some bumps in the road, and that could be scary. But if someone is purchasing to live in and not to look at it as an investment, it could still be a good time to purchase right now while the property values are a little bit lower. And of course, there's plenty of inventory to choose from.
You think this is a scary time for first-time home buyers? They are the ones who, of course, who don't have to sell a house in order to buy a new one. You don't think that this is an appealing time for them, given the lower prices that you referenced?
It can be for lots, but again, no one wants to catch a falling knife, and no one wants to purchase a property now with a pretty good chance that the property could be worth less in a couple months when they do take possession of the home. At the same time,
how confident are you of that prediction? I mean, in the stock market, we often say it's impossible to time the stock market, and that investors who are long-term investors, and this might apply to homeowners who see themselves as being long-term homeowners, shouldn't be too worried about the price of a stock, for instance, falling 6 months after you bought it if you're going to own the stock for 5 years. Does the same logic not apply in the housing market?
It certainly does, right? But at the same time, there's not much confidence in the market right now. If we look at the data going past the past 3 years, the values have dropped. And of course, stock market has taken a big hit since the beginning of the year. That means a lot less money to work with for the down payment and closing costs and whatnot. So first-time home buyers are cautious, rightfully so. But again, the ones that have the ability to purchase they can afford it, it could be a good time to capitalize on some lower prices right now.
Victor, thank you very much. Victor Tran is mortgage and real estate expert at Ratesdotca.